Hello guys, I welcome you all to today's video. It's another beautiful opportunity for us to be together again, and it is the time for the Qora digital Qora digital cash training. Okay, all you need to do is just to understand every part of the training and of course apply them carefully whenever you are trading. Okay, that is very important. Okay, for those of you that are here to that are just joining us for the first time, I welcome you all to today's video. This is Qora Digital Cash. It is a channel which I used to share with you my ideas on how you can make some cool cash for yourself online, most especially within the Forex niche. All you need to do is just to take some time to browse through the channel, watch my training videos, and of course practice and perfect your trading skill first on your demo account before trying them out on your real account. And if you love my videos, can you give me thumbs up and share with families and friends? And if you are yet to subscribe to this channel, can you do so right away so that you can be notified whenever I upload a training video like this? So quickly, let's go straight into what we have right here. Okay, like I said earlier on, we will be looking at boom and crash strategy for small accounts. Okay, so many people have been asking me on how they can grow their small account into something reasonable. So we'll be looking at different strategies which we can use to grow our small account in this week. Okay, and these are some of the things we will be checking out in this video. But first, I need to let you know that there are some things you need to put in place in order for you to do this successfully. It is always okay. Let me tell you the bitter truth about this. Apart from you having the right knowledge of what you want to do, it is always difficult to grow a small account, a very small account, into something reasonable. Okay, not that it is not possible, but it is difficult because you find it much more easier to trade a big account than to trade a small account. Okay, and the reason why we all find it difficult to grow a small account into something reasonable is that we want to be making big money the same way the big account is making it. Okay, we want to start making big money with that small account right from the same day we are starting. No, it doesn't work that way. Okay, you take it step by step. Okay, for instance, if you are trading with let's say you are trading with $10, you don't expect to start making $50 or $100 the same day. It is possible, but you shouldn't put that mindset in your mind. If you do, you're going to lose your money. Okay, and if you should check the amount of time you have deposited into your account and losing it, if you should calculate all the total money you've deposited together, you will know that even you coming up with such amount of money will have done a good, a great deal for you. You would have achieved something great with that. Okay, because that will be giving you a big capital right from the beginning, and you will be able to trade it easily. And the other part of it is that, okay, if you are able to grow a small account into something reasonable, okay, that will have disciplined you within the market. Okay, you would have put something into place, and of course you will have been able to pencil down some kind of precautions while you are trying to grow your small trading account, and that is a kind of experience for you even when you have the big account at that particular point. Okay, so this is very important. It is always important you know this. Okay, so quickly, let's go straight into the chart right away so that we get to see what we can do. Okay, the first thing I always tell you is that, okay, you should have the right knowledge of what you want to do before you start trading. Okay, you should have the right knowledge about the assets, know the best time to trade the asset, and of course know best time frame or probably the right trend to trade it. Okay, all these are very important. You should know the right trend to trade the asset, and of course you should know how to that means that you should be able to identify the right trend or the trend of the market, and you should know the right trend to trade it. Okay, then you should also be able to identify your support and your resistance level. That will help you to know your entry point and your exit point. Okay, that is very important. Okay, and of course with your capital you should be able to say the right lot size to trade it. Okay, so do not use a lot size that can blow your account within seconds, okay, that can blow off your account within seconds. The aspect of risk management should be applied in everything we are doing. We should have the aspect of risk management, the mindset of risk management in our mind, okay, in our heart, before we start doing whatever we want to do. So we should be able to manage the risk. Okay, how much risk are you able to expose to the market? Okay, all these things are very, very important. So quickly, that is why I always advise you to use a very good setup whenever you are trading. Okay, if you don't have a good setup, you might find it difficult to trade successfully on some of these markets. Okay, so quickly, let's see what we have right here. Okay, right here, I will be using this setup because this is what most of my subscribers are using. Okay, and of course, I've also been using it for a while, and it's been amazing. Okay, it's been amazing because it is an indicator that helps us to know the trend of the market right from the beginning to the very end. It helps us to know our entry point and also our exit point. It's also gives us an alert on the trending situation even before it gets started. Okay, so all these are very, very vital and important whenever we are trading. Okay, so for instance, also let me quickly say this. Okay, you should only trade whenever the market is in your favor. Okay, do not force yourself into the market. That is why you have about 6 different assets to trade from, on this particular market. Okay, for boom and crash indices, there are 6 different assets to trade. So if one is not giving you the right entry point, then wait until it will be giving you the right entry point. You can move on to the order that is giving you the right entry point, then you go in and trade. Okay, do not force yourself into the market. Okay, it's not compulsory you go into the markets. Okay, so that is it. So quickly, for boom, I will focus more on the normal trend. We won't be looking at the spiky part for now. Okay, so for boom, the best trend to trade the normal trend, which is not the spiky part, is when the market is on downtrend, and it should come from the resistance zone. While for crash, it should come from the support zone, and it is when the market is on uptrend. And this is when the market is on uptrend. You can see it right here. This is when the market is on uptrend. You can see it right here. It kept on going up till it got to this region, and this is when you can enjoy trading the normal trend for crash. Okay, so that is very, very important. So how do you know when to come in? Okay, already this was on downtrend before, got to this support zone, which was a major support zone, and of course we should expect a few things to happen right here. Either we have a pullback, or we have a breakout, or there is a total reversal in price action. If it is a total reversal in price action, it means that the market is going back into an uptrend. Okay, and that was what happened around here. Okay, so you can see it kept on going up. So we didn't get the entry point signal immediately because anything can happen. It could be a pullback, okay, and it will go back again. So if you were deceived and you got into the market and it now went back again, you will lose some of your money. And to worsen the situation, if the support zone got broken, then definitely to keep on selling like that. Okay, this is where we add our first entry point, so you can easily come in here and trade for a few moments. And remember, this is 5-minute time frame. Let's say you decide to come in here. Let's say you decide to come in around here. Okay, you can see you can pick up a few candles. All these are 5-minute candles. Okay, number one, you are rest assured that okay, the market is on uptrend at this moment, and of course you are picking the right signal that is in support of the trend. Okay, so if you are coming in right here where we have our arrow popping out, you can see you can easily pick up how many candles. 1, 2, 3, 4, 5. Okay, this is 5 candles. 5 times 5 minutes, that is for 25 minutes. That will have given you a lot of profit even before this crash will happen. Okay, so if you do your calculation very well, you will notice that you're going to milk the markets with that. Okay, that is 5 times 5 times 5, that is 25 minutes. Okay, let's say you are using 0.5 dot size, which is giving you let's say you are having like 5 cents, 50 cents per minute. Okay, times 50 cents. Okay, times 50 cents, that is 12 naira, $12.50. Okay, $12.50. But let's say you are using a very small capital. I think the smallest lot size you can use is 0.2, and let's say that is 25 times 0.2. Okay, that is $5. Okay, let's say you are having a $10 account and you are using the smallest slot size, which is giving you 0.2 and is giving you $5, or even half of this divided by 2. I don't think this is totally bad. Okay, now multiply that by 7. Okay, that will be giving you $17.5 plus your initial $10 which you started with. Okay, this should be giving you $27.5. You can see that your capital is growing gradually. Okay, so you don't need to be in the market for for the whole day. Okay, you don't need to, you only need to be in the markets when you have when you have the opportunity to be in the market. Okay, or when the market is reasonable, that is when you go into the market in order to trade these assets and make some good cash for yourself. Okay, so that is how it should work and that is how it should be. And you growing a small capital, it involves you having having a lot of discipline. Okay, you need to discipline yourself. You need to make sure you reduce the risk to the minimum level. Okay, you don't really need to be in the market throughout the day, and you should have a realistic realistic target which you are trying to meet up to. Okay, a realistic daily target which you are trying to meet up to. Okay, so once you have achieved that, even if the market is juicy for the rest of the day, you can stay away from the market at that point. Of course, I know there are some times that you might want to take advantage of the milky situation in the market, but it shouldn't be all the time. If you get used to that, then the day is coming, it will be very milky to the level whereby the market will change its direction and you start losing all your money. Okay, so you need to be very disciplined whenever you are growing your small trading capital. That is very important. So all these are very important. This is just an intro anyway. This is just an intro. We're still going to come up with our more profitable situation. I'm going to show you things that you should spot out before you go into the market, things that you should take note of before you go into the market, so that you will be able to make some good profit for yourself at the end of the day. Then there are some calculations that you should do in order for you to put this situation of things under your control. Okay, so that you will be able to grow your trading capital gradually until you get to the level where you want to get to. Okay, where it will be very easy for you to trade without any hiccups. Okay, so I will be stopping right here. Remember, this is coming to you courtesy Qora Digital Cash, and if you have any question at all, feel free to contact me. My contact details are in the description box below this video, and if you are yet to subscribe to this channel, kindly do so right away so that you can be notified whenever I upload a training video like this. Watch out for my next video. Until then,